Hello and welcome to our live session today with Peter. So Peter, what's up in the markets?
Well, we had a number of comments of Fed policymakers yesterday which tended to keep the US dollar afloat. It pushed it a little bit higher. I would be highlighting New York Fed President Williams. He stated that there's plenty more to do this year in order to get supply and demand imbalances back into order. He would be also noting that he favors rate increases to be at a slower pace, which more or less tended to ease the market worse somewhat. Yet we also had Fed Board Governor Cook. Now she stated that she also favors to move in smaller steps and more or less continue in assessing the cumulative effect of the interest rate hikes. And then she more or less also reiterated the idea of a soft landing for the US economy from the Fed's rate hikes. Sorry. On the other hand, Fed Board Governor Waller more or less stated his concerns about the employment market, which tends to remain very tight. And that could imply that inflationary pressures may be feeding from exactly this tightness of the US employment market. I would be noting, though, that maybe the most characteristic comment came from Minneapolis Fed President Kashkari. He was clearly tilting more towards the hawkish side, and he was more decisive. He mentioned that more rate hikes are to come. He also favored the idea that more or less the median terminal rate should be raised to 5.4%, which is higher than the market's expectations and higher than what the Fed had indicated in the last dot plot. So that was a very clear hawkish comment, which in our opinion tends to be also in line with the last interest rate decision of the Fed. That would be as regards to the US dollar. I would also be noting that we had Germany's HICP rate for January. There was a slowdown, and that more or less was negative for the euro, but on the positive side on a macroeconomic basis. Definitely should inflation slow down in the largest economy of the Eurozone, would have a similar effect on the total HICP rate. And then we have, during today's European session, Riksbank's interest rate decision. The bank hiked rates by 50 basis points. That was the maximum of the expectations. And I think that the bank will maintain a hawkish stance from now on. Other than that, I would be noting also that we have had a number of elements, but they were not so decisive for the market direction.
How about US stock markets?
US stock markets, seemed to maintain a sideways motion. Okay, they were down yesterday, but they are up during today's European session, the futures at least. And in every case, US stock market indexes seem to remain in a sideways motion, more or less maintaining a wait-and-see position. Definitely the earnings reports are also affecting US stock markets, and we have a wide number of earnings reports, of interesting earnings reports today. I would be noting Carnaby, I would be noting Philip Morris. We have also Siemens, Unilever, PepsiCo. I would also be noting PayPal and Lyft. So more or less we have to understand here that on the one hand, one driver for US stock market direction is the Fed's intentions in the tightening of its monetary policy. The more hawkish the Fed sounds, that tends to have an adverse effect on US stock markets. Vice versa, should market expectations about the Fed ease, that could provide some support for US stock markets. On the flip side, we also note that the earnings report is still present and is still affecting US stock markets. Should there be better than expected earnings reports released, that tends to provide some support. On the flip side, should there be disappointing results, we may see US stock markets dropping.
And how have gold prices been behaving?
Gold prices have been up for 1, 2, 3 days straight yesterday, and they're up today as well. And it would be interesting in the sense that yesterday we had the paradox that both the US dollar as well as gold was up. So once again, the negative correlation of the US dollar to gold's prices was broken. While on the flip side, we may see that not being the case today.
And what's on the calendar for today?
Oh, we had a number of releases. In the American session, I would be noting from the US the initial jobless claims figure. Mind you that later on, it would be interesting for your traders. We have ECB Vice President De Guido speaking. And just before the Asian session starts, from New Zealand, we get the electronic card retail sales growth. Should the rate actually accelerate, that could provide some support for the Kiwi. Other than that, during tomorrow's Asian session, I would be noting from Japan the corporate goods prices growth rate. I would be highlighting from Australia the release of the statement on monetary policy. We had already Governor Lowe's statement on Tuesday in the Asian session. Tomorrow we get RBA statement, which could provide some clues regarding the bank's intentions after the last rate hike. I would also be noting from China the inflation metrics, the CPI and the PPI rates. And during tomorrow's early European session, we get from the UK the GDP rates. Should there be a correction and acceleration, we may see the pound getting some support. Mind you that the pound seems to have some elements of strength which other currencies seem to be lacking.
Thank you, Peter. Stay tuned for our next live session with Peter.
So welcome to the technical analysis part of the presentation. My name is Peter Sif, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. Now we can see that the US dollar edged higher yesterday, but since the late American session, actually the early Asian session, if I'm correct, let me have a look. Yeah, the early Asian session today, it has been dropping. And it has broken below the 103.50 level. In this case, in contrast to yesterday, the bearish movement seems to be slightly more decisive. And we may see that allowing for the US dollar to drop, start aiming for the 101.30 support line. On the other hand, note how the price action has dropped, yet has exactly reached the lower Bollinger Band, which may more or less slow down the bears. Should the bears take over, though, I wouldn't be surprised to see the price action paving the way, if not even reaching the 101.30 support level. On the flip side, should the bulls take over, we may see the price action rising, breaking the 103.50, and aim, if not even breach, the 104.55 resistance level. Mind you, the RSI indicator has dropped. It's currently slightly below the reading of 50. It's at 47 right now, which, in my opinion, is still indecisive. But definitely the effect that the bulls had on the index's direction seems to have faded away. That's according to RSI. Let's have a look now at Euro USD. It's interesting how Euro USD seems to remain US dollar driven as we are monitoring a reverse movement to the US dollar index. Mind you that, remember you, the US dollar index was dropping during today's early Asian and European session. Euro USD has been on the rise, practically with the euro benefiting from the weakness of the US dollar, something which may be more evident in the pound. I haven't checked yet, but we'll see that later on. It seems about to escape its sideways motion, and on the contrary, it seems to have the prospects of rising even further, aiming for the 1.0935 resistance line. I would be noting, though, that the RSI indicator has reached the reading of 50, implying a rather indecisive market after a continuous rise over the past 2 or 3 days. Should the price action maintain this bullish movement upwards, we may see it once again aiming for the 1.0935. On the flip side, should the bears be in charge, we may see the price action dropping, breaking the 1.0730 and start aiming for the 1.0580. Moving now to cable. Even more decisive upward movement. I think here we have an upward trend line. Let's have a draw. Starting with this throw, moving up, one throw, a second throw which is higher, a third throw which is even higher, one peak, a second peak higher, and a third peak now in the forming. There's an upward movement here. It's more decisive, it's more clear cut. It's interesting that the RSI indicator was able to break above the reading of 50 and reach currently 55. Still a bit indecisive, but I think it's pushing upwards. And we may see the price action rising, testing the 1.2265, if not even breaching it. Should that be the case, we may see the price action of cable aiming for the 1.2345. First stop for the bulls, though, remains the R1, 1.2265. Mind you that the bulls may have some difficulties given that the price action has broken above slightly, just slightly, but above the upper Bollinger Band, something which more or less may slow down the bulls. On the other hand, should the bears take over, we may see the price action dropping, breaking the upward trend line, breaking the 1.20 support line, and start aiming for the 1.1840. Let's have a look at the USD JPY. Readjusting the chart. USD JPY that, despite an upward movement, I think it's going to be more clear. Let me drill into the 1 hour chart. Okay, that resembles even more sideways motion. Back to the 4 hour chart. The RSI indicator has dropped slightly below the reading of 50. It's actually at 47.2.25. So that more or less tends to imply a rather indecisive market. Note how the RSI indicator has been revolving around the reading of 50. Should the bears take over, we may see the price action dropping, breaking the 129.30, and that would be paving the way for the 1.2725. On the flip side, should the bulls be in charge, I would expect the price action to rise, break the 130.90 clearly, and aim, if not even breach, the 130.85 level, which provides resistance beautifully here and here. So in this case, we would require the pair to reach the R2 before actually adopting a bullish outlook. On the flip side, we would require the pair to break the 129.30, a level which provides support here, here, and here, in order to adopt a bearish outlook. For the time being, it seems that the sideways motion with price action revolving around the 130.90 or remaining close by seems to be maintained. Sorry. Okay, let's have a look at USD-CHF. Readjusting the chart. Let's reposition the labels as well. We see that USD-CHF has dropped, understandable given the weakness of the US dollar today. For the time being, we tend to maintain our bias for the sideways motion between the 0.9275 and the 0.9145 to continue. For a bearish outlook, we would require the price action to drop, break the 0.9145, and start aiming for the 0.9025. On the flip side, should the bulls take over, I wouldn't be surprised. Actually, I would require the price action to rise, break the 0.9275, which is also the upper boundary of the current sideways motion, and start aiming for the 0.9045. Moving now to commodity currency AUD/USD. Things are becoming more clear here. We have an upward movement, yet note how the price action remains in the sideways motion it has been. We maintain that bias afloat for a sideways motion to continue, And should the bulls take over, we may see the price action rising, breaking the 0.7010, a level which provides support here, resistance here, and start aiming for the 0.7130. On the flip side, should the bears take over, we may see the price action dropping, breaking the 0.6880, which provided support here, 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 broken here, resistance here, pretty valid level, and start aiming for the 0.6740. Note the RSI indicator is pretty close to the reading of 50. It's actually at 52, also implying a rather indecisive market, which may allow more or less for the sideways motion to continue. In this case, I would be highlighting also the fact that the Bollinger Bands over the past 24 hours have narrowed substantially. See the diversion here. And the diversion here. It's much, much lower. And that tends to imply exactly that volatility seems to be dropping, allowing for the sideways motion to continue. Should the bulls take over, once again, we expect the price action to rise, break the 0.7010 resistance line, and start aiming for the 0.7130. Once again, let me reiterate this. Should the bears take over, we may see the price action dropping, breaking the 0.6880 level, which provides support here, and start aiming for 0.6740. Moving now to USD CAD. Also in a sideways motion. In this case, just below the 1.3470. The last show tends to imply that there is a mid-level here, which should not be neglected. Once again, the Bollinger Bands have narrowed, implying a low volatility for the pair. The RSI indicator is running along the reading of 50. It's actually right now at 50.2, more or less implying a rather indecisive market. And all of that tends to imply that more or less the sideways motion seems set to continue. Should the bulls take over, we may see the price action rising, breaking the 1.3470. That was a level which provided support on the 7th of February, the 6th of February, the 31st of January, and it provided resistance at these dates and provided support on the 4th, 5th of January. So that's a pretty valid level. While the next possible stop for the bulls would be the 1.37. So that would be a motion which would be something like breaking the 1.3470 to form a higher peak than this one and start aiming for the 1.37. I wouldn't say reach it, but still a clear-cut breaking of the R1 would be required for bullish outlook. On the other hand, should the bears take over, I would expect the price action to drop, break the 1.3285, which provided support here. That would be around the 2nd of the month, February, and start aiming for the 1.3095 support level. I would like also to have a look at the Kiwi, given that we're getting New Zealand's electronic card retail sales today later on. Okay, this is an interesting movement. Why? Because there was an upward movement which broke above the upper boundary of the sideways motion, signaling that more or less a bullish movement is being formed. On the other hand, note how the RSI indicator is still pretty close to the reading of 50, implying that most probably the sideways motion is to continue. Also note how the Bollinger Bands have narrowed, implying low volatility once again, implying that the sideways motion is to continue. For the time being, definitely we're going to be correcting the resistance line given that it has broken above it. Let's turn this into support line. Let's go hunting for a new ultimate resistance line. I'm choosing this peak here. In red. It's pretty close to the R2, I know it. But I think it's striking how the price action was on the rise, reached this level, and then note how deep it dropped. And that was part of a continuous drop which started on the 29th of April last year. Noted. It was a beautiful downward movement. Okay, let's correct the labels. So the S3 goes now to 0.6190, the S2 at 0.6270, the S1 at 0.6360, the R1 at 0.6465, the R2 at 0.6575, and the R3 at 0.6645. Locking everything in. We talked about the direction here. We mentioned that there was a clear-cut upward movement. We mentioned that the upper boundary of its current sideways movement, of its past sideways movement, has been broken, and that's an indication for bullish movement to come. On the flip side, we noted also that the RSI indicator has risen but remains close to the reading of 50, which tends to imply a stabilization of the pair. Also, the fact that the price action has hit the upper Bollinger Band tends to imply a slowdown of the bulls, if not a stabilization as well. In my opinion, I would be expecting the pair to rise even further, yet maybe at a slower pace. You can see 3 consecutive bullish candlesticks, which to some people it may resemble to 3 white soldiers. That's a bullish formation. In my opinion, the bulls got it. It's still at an early stage, but I wouldn't be surprised to see even some correction lower, but I think the bulls got it here. We'll have to wait and see. On the flip side, the pair remains USD driven in my opinion. And any weakening of the US dollar may allow NZD-USD to rise even further. Once again, should the bulls take charge of NZD-USD, we may see it reaching the 0.6465, a level which provided support here and here, and resistance here. While on the flip side, should the bears be in charge, I wouldn't be surprised to see NZD-USD dropping, breaking the 0.6360 and reaching all the way down to 0.6270. Once again, the 3 soldiers formation would imply, in my opinion, a bullish outlook here. Let's have a look at gold, moving away from the FX market. There's an interesting element, but allow me to drill out to the daily chart. I think it will become more clear. You have 1, 2, 3, and the 4th candlestick being in the greens. Gold seems to be benefiting from USD's relative inactiveness. Actually, it's benefiting from the weakening today and of the US dollar. And interesting how it broke above the 1880 resistance line. Back to the forward chart. Is there a bullish movement? There seems to be one which is building up, like here. You can see higher peaks, some stabilization here, yes, but you have one peak, second peak, and the third peak which is forming to the upside. While we have higher trows, 1, 2, 3, 4, and going on. So the 1880, in our opinion, would be corrected into a support line. And let's go hunting for a new ultimate resistance line. Definitely this peak here, a little bit lower. In red, and that would be the 2060. We're adjusting the chart. Let's correct the labels. The S3 now being placed at 1766, the S2 at 1824, the S1 at 1880, the R1 at 1928, the R2 at 2000, and the R3 at 2060. Once again, we tend to maintain our bullish outlook. It's a very slight one, but still there. Should the bulls have a clear-cut takeover for gold's price, I wouldn't be surprised to see the price action of gold to start aiming for the 1928 resistance line. On the flip side, should the bears take over, I would expect the price action to drop, break the S1 1880, break the upward trend line we have just formed, and start aiming for the 1824. We still have a couple of minutes time, so please allow me to have a look at NASDAQ. Okay, clear-cut sideways movement. Nothing much has changed. The RSI indicator is rising though, which may imply some slight bullish tendencies. The Bollinger Bands remain rather narrow. For the time being, the sideways motion seems to be maintained. The same applies also for Dow Jones. Yep, it does. So we tend to maintain our sideways motion. Once again, I highlight the potential for an upside movement for US stock markets. Let's have a look at WTI. Oh my god. Oh yeah. Readjusting the upward trend line. Shifting a little bit to the right, yet the price action, despite some bullish tendencies, seems slowly but steadily to stabilize. Under any other circumstances, I would be highlighting the possibility of stabilization here and a switch from the bullish outlook in favor of a sideways movement bias. The RSI indicator, though, remains at high levels. It's at 64.47, which more or less tends to imply that there's still some room upwards for WTI's price to go. I would expect the price action to rise a little bit further. But once again, the risk of a stabilization tends to threaten the bulls clearly here. So that should sum it up for the day from all of us here at IronFX. Best wishes for solid trading.
Welcome to another video. Today we'll be looking at momentum trading strategies. Momentum trading is one of the simplest forms of trading styles where traders buy and sell assets based on price trends. Momentum trading strategies focus on price action and price movements instead of fundamental factors and long-term growth. Basically, momentum trading is a trading strategy in which traders buy financial assets when they're rising and sell them when they seem to have peaked. Momentum trading is based on these key factors: volume, volatility, and time frames. Volume is the amount of a particular asset that is trading within a given time frame. It is important to momentum traders as they need to be able to enter and exit positions quickly, which depends on there being a steady stream of buyers and sellers in the markets. Volatility is the degree of change in an asset's price. If a market is highly volatile, it means that there are big price swings, while a market with low volatility is comparable stable. Momentum traders will look for volatile markets to take advantage of short-term rises and falls in an asset's value. As momentum trading tries to capitalize on volatility, it is important to have a suitable risk management strategy in place to protect your trades from adverse market movements. This should include stops and limits. Momentum trading strategies usually focus on short-term market movements, but the duration of a trade can depend on how long the trend maintains its strength. This could make it suitable for traders who use long-term styles, such as position trading, as well as those who prefer short-term styles, such as day trading and scalping. Popular indicators for momentum trading include the momentum indicator, the relative strength index, moving average, and the stochastic oscillator. Thank you for watching.
Okay. All right. Okay, I see a few of you guys have already started joining, so let's give it a moment for the others to join first before we begin. So yeah, let's wait a minute or so. So I actually have turned on the webinar chat. So it would be better for you guys to talk in the webinar chat other than the question and answer. Because if you talk in the question and answer, nobody else can see your questions. Then I have to, speak it out or copy your question into the chat. So hello there. Can you guys hear me? Can you guys hear me doing a mic test? I've turned on the chat. All right. Hey, hi there. Hi. Okay, that's great, Marius. Hey, thanks, Vinicius, Sylvia. Okay, I'll give it another 30 seconds or so. We'll let everyone join first so they won't miss out. So yeah, by the way, where are you guys from? So yeah, for me, I'm actually from Singapore. I'm actually in Asia. So at the moment, it's very, very close to dinner time. It's already 6 p.m. at my time. Oh, nice. Portugal. Where is that? Let me see how far is it. Okay, it's at the other side of the world. Wow, you're in Spain. Okay, I think it's the other half of the world. So yeah, I'm actually from Asia. Okay, how's everyone's week been doing? Has anyone traded this week so far or today? So today I actually avoided the London session. Price was very, very choppy within a consolidation. Okay. Let me get these out. Okay, so making some profit. What trade do you take? Do you mind if you share your trade? So I'm quite interested in how you guys trade. What kind of trades do you take, especially for today? Since you said you're making some profit, I'm interested to see which trade you actually entered. Because for me personally, just now I didn't see any proper setups. So by the way, there is the IronFX YouTube channel that you guys can actually subscribe to. So future webinars like this, which are recorded, should be uploaded or will be uploaded on the IronFX channel. You guys can actually go there and look for a recap. So if you want to find out more webinars like this, you can actually go to ironfx.com. So under IronFX School, you can actually go to webinars. So right here, you can actually register for our future webinars like this right now. So I send the link to the chat also. Okay, you actually got a Euro USD buy to 1.07670. Okay, let me see. I'm very, very interested, honestly. Let me see. I got to load my layouts. Euro dollar. So I actually also had a bias that euro dollar might continue going up. So I was actually looking for some a ballpark area of 1.07, this specific area. 1.07800. So you are going towards 670. Okay, so I guess you are looking to clear out the previous swing high right there. So that's your nearest resistance. So currently resistance 1, that is the next resistance. So you can see very, very clearly 1 tap, 2 taps, 3 taps, 4 taps. Okay, roughly 4 taps there. Overlap resistance. So just looking at the daily, I actually wanted to take that buy to clear the upside, because if you noticed, very, very nice right here, we actually have some sort of market imbalance. There's an imbalance in the market right there. So likely we can possibly see your trade go right, hit there, and likely reverse back down. That could be a possible scenario, or price can continue moving bullish. So at this point of time, I will not be trading, not entering any trades. So do you mind if you share what number did you enter? I mean, what time did you enter? And what price did you enter? So in the meanwhile, so when I'm doing webinars, there are actually people who told me, wow, they want to contact me, want to ask me questions regarding the charts, regarding their trading. You can actually contact me here. You can actually click on that link. You can search everything about me. It's just a quick little short portfolio about myself. So feel free to check that link out. Give me a support if you want to. You can follow me. It's free. Okay, you entered at 1.07422. Let me take a look. 1.07422. Okay, that was a very, very nice entry. Why do I say so? Because if you look right here carefully, you actually only took the trade during the London session and when price broke out of this consolidation range. So not bad. You actually took a breakout trade. So you were up about roughly an estimator of 18 pips at the best earlier on. So right now you're floating at about 8 pips. Okay, because today, you said that because today the Euro USD market is mostly bullish. Okay, well, do you actually incorporate any fundamentals to your trading? Hey, hi there, Wisdom, Ik Yang Wa. Just saw you joining. So yeah, actually I'm just looking at Vinicius Silvia's trade recap. A trade he actually entered right here. He actually was in a buy, and he's actually looking to take profit and clear the previous swing high there. So where's your stop loss? Is your stop loss, am I right to say that is somewhere here, your stop loss? Oh, you use 3 moving average. Nice, nice. Okay, well, it's actually very, very cool to see that you guys are actually using multiple trading strategies, incorporating it to your trading style. For me personally, I actually use smart money concepts. I do not use any indicators for my trading. So yeah, that was a very, very good entry. Good job, good job. Hey, hi there, Jay-Woo. Okay, stop loss at 1.07319. Wow, not bad, not bad. 319. So your stop loss is slightly right there. Okay, that's quite a reasonable stop loss. Okay, you are risking 10 pips. Hey, hi there, Diago Imbara Garigo. Okay, without further ado, let us begin the webinar first. So as you can see, you guys registered. What you guys will register for is the Fibonacci series 4 out of 4 projections. Okay, so 4 out of 4 projections. I got to read the disclaimer first before I begin. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So this material is just the opinion of the author, which is myself, and the client's investments, objectives, and risk tolerance have not been considered. So IronFX is not responsible for any loss arising from any information contained. So redistribution of the material is strictly prohibited. Also, just to let you guys know, this webinar is recorded and will be uploaded in the future on YouTube or on IronFX LinkedIn channel. Okay, so Vinicius actually asked, okay, should you close or should you let it go? Well, this question is very, very subjective. You got to follow your own trading strategy. So since you are using the 3 moving average, you should use your confirmations, the idea invalidation. Is your idea still right? Or do you think it will go down? So this part is up to you, man. You got to handle the trade. That's the only way that you can learn from it. If you close early and then it eventually hits your take profit, there's something to learn too. Okay, let us begin. So, okay, my name is Chen Yongxing and I'm actually the investments analyst for Everest Fortune Group. So we are actually the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So just to let you guys know, today the webinar will be a shared webinar. So I'll be doing it together with Sarah, my colleague. So this is Sarah right here. So she'll be taking over for the first half of this webinar. Okay, let us begin. Okay, she will take over now. So later I'll come back, I'll take the other half of this webinar. Okay. I think, okay, so if you want to, this is a PPT, then you want to, over here is the minimize, then you can open Google Chrome. Okay.
Hi everyone, my name's Sarah. Okay, so today I'm going to be the first part of the Fibonacci retracement 4.4. Okay, before I starting, let's take a look at today's agenda and what we are going to learn and what I'm going to share with you guys. So firstly, we are going to have a recap on Fibonacci retracement essentials and what are the importance of the Fibonacci retracement. And secondly, the ideal market structure, which means under which situation is good for the Fibonacci retracement and which graph or which is not good, is not suitable for this Fibonacci retracement. Thirdly, we are looking at different Fibonacci retracement level, which means Fibonacci retracement, Fibonacci expansion, and also Fibonacci projection. Fourthly, we are looking at what are the Fibonacci projection, and lastly, what are the confluence level, which means what are the significant level we need to take note by. Okay, let's start with the first one. Before we are using Fibonacci retracement, always to check is it is it suitable to use this one as an indicator for us to find the support and resistance, or is that a good thing? Is that the correct timing? So what are the essential steps that we are finding using Fibonacci retracement? Firstly, we must to make sure the market is clear enough. What's the meaning of market is clear enough? We are looking for the a big zigzags. Okay, it's a big moments. It's not like something like very small moments. We cannot see it. And secondly, we need to identify the recent trend. Okay, what is this means? Means we need to identify whether the price is going up or going down. So thirdly, we need to identify the recent major swing low and swing high, which means the highest point and the lowest point. We always draw the line from the left to right, okay? So from the highest to lowest or the lowest to highest. Okay, so for this graph as an example, so you see this one is the, okay. So we draw the Fibonacci from the highest point, which is there, and to the lowest point, because it's a downtrend. Okay, what I mean by significant swings. Okay, so now let's take a look at what is called insignificant swing, which means the time we cannot use Fibonacci. What is insignificant mean is like the movements are too small and there are no significant swing high and swing lows. Okay, so you see this graph, the price movement are too small and there are no significant, no very big movements of the price. Let's take a look at this as an example. So this one we are considering as insignificant lows. As you can see, the price is moving up, down, up, down, up, down in a very small range. So this is not very significant and is not useful for us to using Fibonacci. Okay, so now let's take a look at what is called significant swings. Okay, so it is just the opposite way of insignificant swing, which means there are significant move up and move down. You can see this graph as an example. There are significant move up, then move down in a lot of, then move up again, then down again. Okay, so which means the peak, okay, means the highest point and the lowest point is very obvious. Okay, means very easy to identify and very easy to see it. And make sure it's in a very clear market movement. You see, down is down is all the way down, then up is all the way up. It's not like the price is up, down, and down, and down. This one considered in unclear market movement. Okay, take a look at this as an example. So you see here, so you see this peak and this peak is all significant highs, okay, swing highs. And you see here is considered significant swing lows, okay. So we should know like this significant swing and significant swing high and swing low is good enough for us to identify it in a very clear market structure. Also, it's very easy for us to draw up all the Fibonacci retracement. Okay, so now let's take a look at what do I mean by follow the market structure. Okay. So here is an example of how to draw a Fibonacci trend lines. Okay, so your Fibonacci trend line must be follow the market or the price structure clearly. You see, in this case, there is a zip chart market structure. Okay, so it's not in a straight line. So the retracement down here cuts through the market structure. You see here. Let me figure out how can I. Okay, you see this part here. Sorry, let me. How to clear the thing? I use this one. Oh, okay. Sorry. So you can see the retracement draw here. Okay, it has cut through. I still like this. Okay, you can see the retracement here is cut through the market structure. Okay, which means making the Fibonacci retracement less effective. Okay, so take note. So here is the Fibonacci retracement should not cut through too large area of the market structure. Also, the Fibonacci trend line must follow the market structure as just now I mentioned it. And lastly, the Fibonacci retracement should not derive too much from the price movement, which means if the price movement is going up, you cannot be a huge going down. So let's take a look at what meaning by follow the market structure. Okay, so follow a market structure means there is a clear downtrend movement. Okay, and the Fibonacci retracement trend line follow the price movement. And lastly, they tend to work better on higher time frame. For example, it's working better on the H4 or H1 or day one time frame rather than like 15-minute chart. So let's take a look at this one. Okay. Wait. Sorry. Okay, let's take a look at this one. You see, we draw the Fibonacci from the highest point to the lowest point. As you can see in this example, the price is follow good enough to the market, to the price movement. So there is a clear downtrend movement. Let's take a look at this. Okay, so what meaning by clear market structure? As you can see, there is a very clear swing low and very clear swing high. You see here, swing high, swing high, swing low. Okay, so all this point is very significant and for me, it's very easy to identify it. It consider a very clear market structure. So what's meaning by unclear market structure? As you can see, just now I mentioned the price going down, up, down, up, down, up, down. Okay, so this one is very hard for me to identify actually which point is considered a significant swing high or significant swing low. Okay, besides Fibonacci retracement, we have different kind of Fibonacci retracement level. So every time we are using the Fibonacci tool to draw it on our graph, so you can see the number vary from 0 to 100. We are saying is Fibonacci retracement level. Okay, so the negative number we are saying Fibonacci expansion. And for the number more than 100, we are considering Fibonacci extension. Okay, so now I will just demo a very simple way to draw Fibonacci retracement. Let me open my trading view. This screen is shared, or I need to pull out to here. Okay. Okay, so is there anyone looking for any carousel pair that I can draw for you? Or like if there is no one, so I will just using my own graph. I will just randomly choose one. Is there anyone here? Okay, so if no one answer, I will just Aussie USD. Okay, let's take a look at Aussie USD. Actually, this is the currency that I want to draw it. Okay, this is the Aussie USD that I have just analyzed today. Okay, as you can see, the current price is a price about 0.69. So I already found the first support and first resistance, which is the first resistance is considered the recent swing high, and first support is the recent swing low. But I don't think my price will go up or like go down to the price today, okay, or like in a shorter time frame. So what I like to do is like I will identify the significant high here, which is at this place. Significant swing low and significant swing high here. Okay, so what I do is I will just draw, let me remove this thing first. Okay, so what I do here, I will just use this one, Fibonacci retracement from low to high, okay? I like to show all Fibonacci first. Then I see, okay, you can see the price actually is here. Is at exactly the level 61.8, which is a very significant in Fibonacci retracement. So I by this line, I identify here is as my intermediate support, okay? So it's somewhere here. So I was hoping once the price will pass through the 61.8% Fibonacci retracement, it will go up. If not, the price will go down. So same as this one, okay, how I'm going to find the first support? First support is the recent swing low, but I need to add more confluence to my first support. How I'm going to looking for is a valid or like is a very key support area? So I draw it, I identify the swing low. I identify the swing low and identify the swing high. Okay, so I use Fibonacci to draw it from low to high. Okay, let me hide this one first. Oops. Okay, and now it's more clear. As you can see, there is 15% Fibonacci retracement, which is almost in line with my first support. Okay, so here you can see this level is very significant and very key when we're doing analysis. And once the price is trying to break through this level, it will go down. Otherwise, this support is very strong enough that price unlikely to able to break through. So this is how I'm using Fibonacci to identify all the key support level and how I identify the price will move. Okay, so now I may pass to my colleague Yongjing to share with you more on the Fibonacci projection and expansion. Thank you.
Hey guys, thank you Sarah for that. So I'll just continue the other part of this webinar, so it might get a little bit more technical. Okay, so Vinicius Sylvia and Techno Camon X-Pro actually asked for Aussie dollar and USD JPY. Well, later on when we finish this webinar, if we have extra time, definitely we will go through we can look at some live charts, give some of my thoughts. Okay, let us continue. So the next part of the webinar, okay, we're going to show you how to do extensions and expansions. So for this slide, I know it might possibly confuse you guys, so I'll just jump into the charts. So how to use a Fibonacci extension and expansion. So just now, Sarah has already mentioned the expansion line is actually a negative 27.2% and negative 61.8%. While the extension is the positive 127.2% and 161.8%. So let us see how it works. So maybe looking at the 1 minute chart. Okay, there's a line here. I was thinking, what was it on the thing? It was a zoom thing. So let me clear it out. Clear all drawings. Okay, just having a quick look at it. Let's take a look. Okay, so if you actually draw a Fibonacci line, let me find a better setup. Okay, right here. Draw Fibonacci line from the top to the bottom. Let's see where price could possibly head towards. So you actually notice that price went up towards the, so we'll be looking at extensions first, 127 and 161.8%. So notice that price went up and headed towards 127.2%, and then the 161.8% before it rejected back downwards. So just by using extensions, you can actually use it as a form of take profit area. And use it to take profit once price hit 161.8%. You can just close out your trade, or hit 127.2%. You can close out your trade just in case price reflects back down, just like in this scenario right here. Okay, let us move on. Expansions. I'll show one more example by expansions so you guys can see. So if you notice that if I draw a line down, so I'm drawing from the top to the bottom right here, because price went up and retraced back up before heading down. So if you actually noticed, price tapped very, very nicely in the 50% Fibonacci line. 50% right here, tapped right in very, very nicely, reflected back down. Where did it go to? It went towards the negative 27.2% area. So we have negative 27.2 and negative 61.8%. So this could be your potential take profit target if you are looking for short. So let's say you shorted around here, stop loss above, can aim for negative 27.2%. So notice the moment price taps into that area, it reflects off, bounces back up. So always you can actually use 27.2%, negative 27.2%, and negative 61.8% as your take profit target. So you are just kind of forecasting where price might possibly head towards. Okay. Next, let's take a look at this slide. What do we have next? So how to use the projection tool. Just now I showed you guys already. I mean, haven't showed you guys, my bad. This projection. Okay. How will a projection work? So we are only going to be focusing on the 61.8%, 78.6% projection. So just a tip on it. So on the MT4, the Fibonacci projection tool is the Fibonacci expansion. And on the trading view, it is the Fibonacci extension tool. So ultimately, unlike the other three methods we have gone through in our previous webinars, this method requires 3 points: the starting, the middle, and the ending points. So we use namely the 61.8%, 78.6%, and 100% feed projections for this. You want to make sure you look out for flash zigzag shapes in this case. So notice it's like the Harry Potter, the zigzag right there. Harry Potter zigzag. Okay, my bad. Let me clear it out. Might have messed up this slide. Harry Potter zigzag pattern. Let's look at a couple examples of this. So looking right here, you notice that from the starting point, the top, draw towards the bottom and to the end. You notice that the projection lines showed the 100% and then price went back down. Tapped into the 100% projection line before it rejected towards the upside. So let us just take a look at some examples on trading view. Okay, Fibonacci projection, where is it located? It's located right here. So 1, 2, 3. On the top left hand of my trading view chart, you guys take a closer look. If you are on the phone, please scrutinize your eyes. Take a good look. So it's called the trend-based fib extension. My mouse cursor is over it right now. So you can click on it. Trend-based fib projection. Let me find one nice example. So probably same thing like from here. You can draw it from the starting point to the middle point to the end point. So draw it out. You notice price taps into the 78.6% area and the 61.8% area. But in this specific scenario, once price tapped into the 78.6% area, it actually bounced towards the upside. And ultimately, price also continued moving down towards the 100% Fibonacci projection line. I find more examples for you guys to use. Okay, find another one. Okay, so like this, in this, okay, maybe this is, because this is likely a news event, so it's not the best example. Okay, let me find one. Okay, maybe here, this is quite a nice one. So notice there's a starting point, an end point, and a retracement point. So let's say you already started a short here. You started a short somewhere here, you wanted your stop loss over here, but you do not know where to take profit. How can you use this Fibonacci projection line? So draw from the starting point, from the top to the middle, and then to the end point. You can ideally aim towards the 78.6% or even the 100% retracement level. So looking at this area, the trade would likely hit a 1 to 2.82 risk to reward ratio before it actually did a minor bounce towards the upside. So let us find another setup. We'll find an inverse setup. Inverse, what do I mean by inverse? It's like a reverse Nike tick. So looking right here, we will be going towards the starting point, towards the middle point, and towards the end point. So we can draw from the bottom to the middle towards the end. So notice that once price went up, tapped into the 100% fib level, it actually rejected back down immediately. So you can actually use the 100% Fibonacci projection line as your take profit target. Just close it out there if you want to play it safe. You know, you are not risking it. You're not risking that price can continue moving bullish, because price first rejected back down and then continued to move back up. What if price just continued moving bearish? It would likely hit your stop loss. Let me find another inverse projection line. Okay. Let me find it. Still looking for it. Okay, I should find somewhere in the areas where there are long positions that are taken. Okay, so likely this is a good setup. So you are drawing from the bottom towards the middle towards the end points. So we'll be drawing from the bottom. The starting point, I mean, wait, this is the wrong tool, sorry. So we click on it from the starting point to the middle points and towards the end points. What do we notice? Price taps into from bottom to top, and then it frolicked around before it tapped into the 100% Fibonacci projection area. That should be your final take profit target before price started to frolic around and rejected back down. So you can use this as your take profit target, the 100% Fibonacci line. I'll do a few more examples, maybe 2 more examples, so you guys can understand what I'm actually talking about more in depth. So looking right here, another one. From the starting to the middle to the end point. So draw from the bottom to the top and to the bottom. So you notice that price tap into the 100% fib level as usual before it started to reject and then ultimately push towards the downside. So yeah, any questions so far, feel free to let me know. So any questions, just let me know. We have about 20 minutes left. Ask me any questions. Please do not wait until the end of the webinar before you ask more questions. Okay. Next, let me find a good one, another setup. All this is when we know the move of the market. Definitely, if you have a bullish bias, let me find something like this. So let's say you have a bearish bias. You are thinking you want to short. There's some kind of sell that you are looking at. You're trying to sell towards the downside. Something like that in such a situation. So we have a trend line, some kind of moving average that is telling you that price is moving down. So with a bullish market structure, you can actually draw. With a bearish market structure, my bad. So you can draw it from the top to the middle to the end point. So somewhere when the retracement goes back up, you're looking for some kind of structural break. So let's say you decided to short somewhere down here, stop loss above, you do not know where to take profit. You can use the Fibonacci projection from the top to the middle to the end point. So notice that you can actually use the 100% Fibonacci line as your final take profit target. Okay, what time frame can you use the fib? You can use it on any time frame, even on the 1 minute time frame, 5 minute time frame, or even the 30-second time frame. So yeah, any time frame works, but definitely, of course, if you are using 15 minutes, it works even stronger. So it's even stronger on the M15 chart. Okay, let me take a look. Let's say if you draw the fib from the top to the middle to the end, bearish bias. So drawing a fib, top, middle, end. So notice that price actually tapped into the 78.6 level instead of the 100%, just because you are on the larger time frame. So as the larger the time frame you go, 15 minutes, 30 minutes, 1 hour, all this starts to be more sensitive. Even this 61.8, 78.6 starts to be more and more sensitive as you go higher and higher up the time frame. So price went back down, retrace, tapped into it before it bounced right up. Find one more projection because it's a very, very new tool. Not many people are using it. In fact, 99% of people that I've met and talked to, they do not use Fibonacci projection. So it's something very, very new. It's a new tool. So let's say right here in this specific market scenario, it's a very, very obvious bullish market. So we have 1 tap, 2 taps, 3 taps, 4 taps, and 5 taps, and 6 taps. So this is a very, very confirmation that this is a strong trend line. Price is in a very, very obvious bullish market. 15 minutes chart. So next you can draw from the starting point to the middle point towards the end point. So you can draw the Fibonacci projection line from the starting point to the middle point. Is my bad, wrong tool. Starting point towards the middle point towards the end point. So notice that price came very, very closely within the 78.6% Fibonacci area before it rejected strongly back down. So price actually came pretty close towards the 100% Fibonacci level, but it did not actually tap into that. So just do take note, the higher time frame you go into, the Fibonacci projection lines start to get more and more sensitive. So if you are on the 1 minute, definitely I would try to aim for the 100% Fibonacci projection line as my potential take profit target. So looking right here also, drawing from the top to the bottom and to the end. So starting points, middle points towards the end points. You notice that price actually tapped nicely within the 78.6% level, and then reflected right back up. So let's see the current price, the market price. We can likely forecast where price might head to. Okay, I don't think there's any setups yet, so maybe I move on to 1 minute. Likely we can see something. So maybe just because price moved from the top to the middle to the end points, we want to see whether price has reached its final, so-called final destination. So price has already tapped into the 100% Fibonacci projection line. So it's right now it's in a consolidation. Final target has been hit. So Vinicius Sylvia asks, so to put on a fib, we need to use all the candle and not only the most significant part. Yes, you are aiming for the most significant part. If you look at 1 hour, another example on the 1 hour time frame. Let me find a good example. So we have a significant swing high right there and a significant swing low. So when a big drop like this happens, we always expect some sort of retracement towards the upside. So when price has reached its retracement, you can start to draw your Fibonacci projection area. So drawing from your top to the middle and towards the end. So I'll draw it out, top, middle, and the end. So notice that price went up very, very nicely, retraced back up before it went towards the 78.6% projection line. That's correct. Do not just use the body. You always must use the wick. Okay, always use the wick and not the body. Okay. Any more questions? Jude, Aguabo, Kat Kasmi, Samuel Julian, Vinicius Sylvia, Wisdom Ikyangwa. Any more questions? Let me know. I'll try my best to answer you to the best of my abilities. Okay. So let us move back towards the PowerPoint slide. Okay, so please screenshot this down before we continue. Back, I had some technical issues with the mic. Okay, just now I already showed you guys the inverse Fibonacci projection. Okay, next, I already showed you guys how it bounces off, starting to the middle to the ending. Price hit the 78.6% projection before it bounced right back up. Okay, noted by this slide. Okay, Jude Aguabo, do they have these two on Smart Money, on Smart Trader? I don't think I've heard about Smart Trader. Let me take a look. What's Smart Trader? Okay, I don't think I've used it before. You can actually try to search it up. So I'm only use TradingView and MetaTrader for my trades. So the 100% Fibonacci line is one of the most powerful Fibonacci extensions area. So notice when price taps into that area, it rejects off almost immediately. Okay, please screenshot this down before I continue. Yeah, that's actually a very, very good question. I've really never heard about the software called Smart Trader before. Maybe I might look up on it after this webinar. So yeah, as I mentioned earlier on, if you want to contact me outside of this webinar, you want to ask me any questions outside of this webinar, feel free to visit my Linktree. So my LinkedIn, my Instagram is all there. Please feel free to follow me. Okay, next. Invalid Fibonacci retracement. So when does a Fib retracement become invalid? Okay, while I'm explaining, please screenshot this down. So one of the most common scenarios of this is when price makes a lower low. So assuming you are drawing a Fibonacci retracement from the top to the bottom, like in the picture, if there are bars on the right that break your ending point, let me find it right here, breaks your ending point, you cannot use these points as your retracement. So price has broken the 0% level and has made a lower low. Always remember to pick the lowest point with nothing on the right of the ending point. So you should be drawing from the starting point towards the ending point right here, because this was the lower low. Always combining Fib retracements. So right now we want to add confluence to our trades. So the trick is to find multiple Fibonacci retracement levels lining up together, so you can increase the probability of a bunch of Fibonacci retracement levels working versus a single Fibonacci retracement level. So that is the definition of Fibonacci confluence. So you notice just by using the normal Fibonacci extension line, 161.8% Fibonacci extension, together with the negative 27.2% Fibonacci expansion, together with the 78.6% Fibonacci projection line, all in one nice little area. And then price bounce off that Fibonacci confluence area towards the upside. That is what we call a Nike tick. So that is one of the best trading strategies out there at the moment. So okay, Vinicius Silvia asks, when using retracements, to what percentage should we look? So generally, let me type out in the chat, because I'm sure I'm talking a bit too fast. So we generally use 127.2%, 161.8%, negative 27.2%, and negative 61.8%. This is for Fibonacci line. So for Fibonacci projection, it should be 78.6%. Wait, give me a moment. 61.8%, 78.6%, and the 100%. That's for Fibonacci projection. Okay, so yeah, just copy the text that I've just sent, and then you can actually customize it on your trading view. Okay, next. Just now I already showed you guys this, just a larger picture. So 3 different Fib levels there, negative 27%, 161.8%, 78.6% projection, and price bounced off very, very nicely. Okay, next. Fibonacci extension. So in this example, we have two Fib methods. We have an inverted Nike tick. So from the top to the bottom and to the middle. So you can see it's a very, very obvious Nike tick. Okay. So with price reacting off the 127.2% and the, right here, I'm circling it multiple times, 127.2% Fibonacci extension line and the 61.8% Fibonacci projection line. So you take note of the flash shape, then we can see price bouncing. Let me get it out. Bouncing right back up. So I'm just showing a few examples. So this is another example. So we have the 100% Fibonacci projection line together with the 127.2% Fibonacci extension. So this area coincides very, very nicely in this tiny, tight little box area. Price steps into that area and then it rejected strongly towards the downside. Why? Because it's a Fibonacci confluence. Please screenshot this down before we continue. So this is actually a very good example. Okay, next, let us continue. Combining Fibonacci methods for the fourth example. So in this example, the 61.8%, so it's not that clear. Take note of this yellow dotted line. So that's the 61.8% Fibonacci retracement that is in line with the 100% Fibonacci projection to give us a strong confluence area highlighted by the purple square. So that's where price has bounced off, tapped and bounced off. Okay, next, you notice that I'm looking at the negative 27.2% Fibonacci expansion line together with the 100% Fibonacci projection line and the 127.2% Fibonacci extension line. So we have a nice little box area right here. Price steps into that and it actually reversed towards the upside. So that's a very, very strong confluence area. So please screenshot this down before we continue. So for Fibonacci retracement line, we only be drawing from the top to the bottom. Okay. Please screenshot this down. Okay, let us continue. Okay, next. So in this example, we have a swing low support. Let me get this. So there's a swing low support right here denoted by the green line. So in one long-term 100% Fibonacci projection in line with another short-term 61.8% right here. 61.8% and 100%. So we have a nice little area right there. And then it actually made a strong confluence area. Price then tapped in and then bounced right off. So please practice your Fibonacci extension, Fibonacci expansions, and your Fibonacci projection areas so you can bring your trading to the next level. Okay, I think trade management, we'll leave that to another day. So that's another topic that we'll be going through in the near future. So any more questions, feel free to let me know before I end this webinar. So I'll give you guys another 30 seconds or so. So just to let you guys know, I'll be very, very cautious about trading today just because the FOMC member William, FOMC member Barr will be speaking later. So it's actually a very, very volatile news event that is happening in about 3 hours and 15 minutes time. So later on, in another roughly 8 hours, we also have the FOMC member Waller speaking. So expect, for me, it will be through the night. So I expect much volatility happening in the markets. So I'll be waiting until tomorrow morning, after the Asian session, and hopefully find a trade during the London session tomorrow. So for now, I'm staying clear of the market. So I'm actually risk off sentiments. Okay. So yeah, I would like to thank you guys for joining me today. Appreciate you guys for staying from the start to the end of the webinar together with Sarah. So thank you, Jude Aguabo. Thank you, Kat Kasmi. Thank you, Samuel Julian. Thank you, Vinicius Silva. Thank you, Wisdom Ik Yangwa. No problem, Vinicius Silva. No problem at all. No problem, Samuel Julian. Hope to see you guys soon again. Stay safe trading, especially tonight. No problem, Jude Aguabo. You said thanks a million for the sauce. No problem. I'll be glad to share my secret sauce with y'all. Okay, bye guys. Take care. I'll be leaving now.